All right, everyone. Chapter 2. Hopefully, Chapter 1 has given you some insight into the workings of financial markets. And I hope you found these sources interesting and that you've gained some new perspective on this game. So as I mentioned, we start from up high, completely zoomed out, and we're going to zoom in more and more. So that's what we're doing this chapter as well. And this chapter is all about financial markets, the types of financial markets, I should say, assets that we find there, and instruments that we can use, actually. So chapter 2, that's where we are. So as mentioned, I'm going to cut these slides, and I'm going to keep the slides to a minimum, actually. So actually, let's just make our way to the browser. So first source, types of financial markets. You don't necessarily need to understand everything, but this helps you to create a view on what is actually going on. So for example, money markets, if we were to do a course if we were to try to cover everything that is involved with money markets, we would need an entire separate course. So the thing that we are going to be focusing on most of all is the capital markets and a bit of currency markets as well. So we will talk a little bit about Forex because it is quite a huge topic. Many traders venture into that direction, and we actually are teaming up with for this edition, we're teaming up with some cool guys who are very good at the Forex game. So you will come to see them later on. But this is our main focus, I would say. So the shares, obviously, we're going to look at stock markets, a bit primary and secondary, but mainly just capital markets. So this is just like terminology to give you a perspective. Okay, like what do financial markets actually consist of, right? So we'll be focusing on capital markets in this sense. Bonds we're not going to cover extensively. It's important that you know what it is, but we don't, for now at least, need to understand the full workings. Again, each of these sections is probably an entire bachelor degree or even a master's degree if you really want to dive deep into it. So we zoom in and focus on the shares part and the actually participating in financial markets part. So this is a good overview we found to help you understand at least this in a very basic sense. So we will be looking at spot and futures markets, by the way, what that actually means. What is a future? What is spot? How does that work? We will be looking at that. Commodities is one type of asset or asset class, I should say, that is really important to understand. So I'd like to think of this as natural resources. So anything like gold, silver, water, corn, copper, all these types of things, they are a certain category, a certain asset class, we call them. And they have their own characteristics, their own products, designated places at which you can trade them or invest in them. And it's just really important to know. This will also be the bridge, for example, towards futures. But I will let the video and the sources do their own work. Very interesting. This channel is amazing, by the way. Old videos, but it doesn't make the content that is actually shared here less relevant. On the contrary, believe me. Derivatives. So you may or may not have heard of that. So derivative is a product that derives its value from something else. And in the case of finance, we say an underlying asset. So we have, for example, a stock, and then we have stock derivatives. So let's say we have Tesla, and then we have Tesla derivatives. How can we classify them? Well, we have futures, options, and swaps. We will be talking about futures and swaps in this program. Futures probably most of all. Swaps just a tiny bit. Definitely not the traditional market swaps as they were invented. But mostly futures. And this is also, for example, futures is the thing that I trade most. I do know a thing or two about options. I used to trade them in my early 20s for at least a little bit, but I'm nowhere near specialized enough to claim that I'm an authority that can teach you about options. So that's also still a topic for me that it's on the list to really master, but it's a whole study in of itself. So I just simply haven't had the time yet to really pick that up and master that part of the game. Anyway, so derivatives is a crucial component. They are huge markets, and we'll be trading, or at least the chances are that you will be trading derivatives if you go onto crypto exchanges, for example. and they're quite accessible nowadays. So it's important to understand what they are and how that works. Forex, as mentioned, so the trading of currencies. It's a slightly different market than the stock market, so the opening hours are different already. The way the amounts that you buy work are different. You have different brokerages who specialize in different, services when it comes to these markets. So quite important. But I do know that the Forex market is quite popular among younger traders, and we will talk plenty about that. So something that has gained popularity recently is becoming a funded trader. What that is, we will discuss in length, and we will have our partners discuss that as well. What that is actually like, and how you can, with relatively little amount of capital from your own home, actually become a trader at a firm, sort of indirectly. Like I said, like I'm not doing that, so I will let somebody else explain that in great detail. But it's really quite interesting. So, and obviously Forex markets, so the currency markets in itself are really interesting to understand. Like, okay, what does it mean when the dollar loses strength, right? When the euro gains value in comparison to the US dollar? Like, what does that mean? What are the implications of that? Because these implications also are, they have an effect on, for example, the average person who invests in cryptocurrencies, right? Something that happens in the capital markets can, or in the Forex market, can have effect on, on other markets, right? This financial system is all interwoven, and we need to understand that. So we need to understand at least the basics of the components that we are working with. Before I get into, repeating myself, let me stop there. Forex is measured a little bit different, so it's important to understand how the numbering of units works, right? It's different. It can be different for every category, or for every asset class, or for every asset, and it can even differ. Like between crypto and traditional markets, there are huge differences. It's all sort of like the same thing. It often rhymes, but there are differences, and we just need to get an understanding of what products we're buying, how we're buying that. What we're paying for them, the fees attached to that sort of stuff, right? So, but anyway, back to Forex. This is crucial to understand if you want to understand how Forex works. So we've put that in there for you to read through. This is also your first, as I slide down a little bit, the introduction to leverage. And leverage is something that we will come back to in week 5 when we talk about risk management. So we will talk about how it actually works. But for now, it's a good introduction. So it allows you to trade or invest with more money than you actually have in your account, right? And that's used a lot, believe me. And it's quite a crucial component of financial markets. And we want to just highlight sort of like the risks attached to that, but also how you can use it in a creative, effective way when it comes to actually allocating your portfolio or your capital in a certain way that you can actually safely use margin, and it actually makes a lot of sense to use it sometimes. Right, so we want to give both perspectives when it comes to leverage. Generally, it's considered like, leverage is risky. Yes, it can be, but not necessarily if you manage your risk properly. So, but I think that's for week 5, just to give you a heads up on where we're going. But there's a lot of leverage involved in Forex, and that's why it's crucial to know. The advanced source is about options. Again, it's one of those things that I would like to highlight more in the course, but as you can see, the video is 2 hours and 53 minutes. And if you want to really understand and practice with options, you need months, probably. And to master it takes probably even longer. So don't let that scare you, by the way. Options are absolutely fantastic, and they serve their own purpose within financial markets. They allow for leverage. They allow, for example, if you think the market is going down, they can be an instrument which make you, or like allow you to place that bet, right? If you think Amazon is super overvalued, then you could use put options in this case to bet on the potential downturn of the price of Amazon. So that's the advanced source. Contrary to the first week, this is not mandatory, but if you are interested in this, it is there, right? You can use it, and you can go down this road. 15 million views already I've seen. It's really just a good basic introduction on the topic. Back to my thingy. No more slides, I would say. I think it's perspective time, so bear with me as I get used to this setup myself as well. some perspectives. Again, I may repeat a thing or two, but I think we cannot repeat things enough sometimes. We want to get familiarized with the types of asset classes that we find within financial markets. Now, why is that important? Is it just important to memorize these things and they're like, okay, I know how this works, I know how this works, I know how this works? No. The practical example of knowing how all the instruments work is that for a given scenario within financial markets or within, for example, a bull market. A bull market is generally when something goes up. That terminology you will find somewhere at some point. We'll cover that. Bull and bear, bull markets, bear markets. There may be a scenario within any given market that gives the opportunity to use a certain instrument. For example, a futures contract, or for example, using options. If you do not know what those are, like derivatives, for example, then you are basically stuck with buying something. Like you buy something and then it's kind of, time will tell if it will go up. There's obviously a probability to some degree that something will happen as you sort of anticipate it. But there are products out there that you can use that just make you tweak your strategy just that bit more. And one of the results of that is that, obviously if you spend the time to actually learn that you will have the opportunity to outperform simply buying and holding something, right? There are just moments, and we'll look at a lot of price charts, for example, where I will show you like there is something in a price chart, or there's something about the fundamentals of a company, for example, that tells you maybe now is not the time to be 100% invested, but maybe you should, de-risk, as we say, and decrease your position in a company or in a cryptocurrency by 50% for these and these reasons. That's one way that you can look at it, but you can also say like, okay, I'm going to use a futures instrument to, for example, take the opposite bet. So as I said, with options, you can do that with futures as well. You can bet against the market. Now, one term that I can drop already, this is something called hedging, for example, is protecting your portfolio from downside by simultaneously, while you still have positions that are betting on a asset or a market's upside, you take a position of equal size to the other side, sort of leveling your position out. Hopefully, I will explain that better in the future. But what my point here being is that we have all these instruments and they serve a role. They are used very widely, and certain circumstances allow you to use that to your advantage, to protect your portfolio from downside, or by simply selling all your capital and actually taking the opposite direction of a market. For example, when, some bad news about a company, like the final nail in the coffin for a company, allows you, first of all, to decrease your position, but then actually maybe take the other side of the bet where you say like, okay, well, this company is currently valued at like $1 billion, but considering everything we know right now, it's worth half that, and I'm going to bet against that. Well, if you want to do that, you need to obviously be aware of the instruments at your disposal. So that's why, or at least that's one perspective on why it is important to understand these assets. I said it in the previous edition of TDFA, we are going to give you a nice tool belt. And then at the end of that, we are going to nudge you into the arena of financial markets, and you actually have some tools at your disposal that you can use that allow you to become a participant that knows what you or she is doing, right? So that's on the importance of understanding the assets, the types of assets, the asset classes. For example, how hedging works. So gold. I'm going to round up. Gold always used to be a good inflation hedge. So, if you account for inflation, you would buy some gold. Gold would, it would have a more stable value while your currency devalues. And in that way, you are tweaking your portfolio, right? And that's what we want to get to become masters of your own finances, of masters of your portfolio, and you have the tools and skills to actually manage that to perfection. Okay, that's it for this video. I hope that was a good enough perspective. We'll see each other in the next video. Enjoy the sources. Again, questions, Discord, lectures. We'll see each other soon.